This Coinbase deal will bring banking giants to XRP, and why February 26th is crucial to XRP holders. These questions and more news we will discuss in today's video. Welcome to CryptoWhale. Don't forget to give this video a huge thumbs up and subscribe to the channel so if you are interested in everything around XRP, this is the place. Continue with why February 26th is crucial to XRP holders. Crypto analyst Pompeius has argued that Ripple's recent actions reflect a deliberate effort to construct a comprehensive institutional infrastructure comparable to that of established banking institutions. In his post, he asserted that Ripple is building a banking empire and identified February 26th, 2026 as a critical date that market participants may be underestimating. According to Pompeius, understanding Ripple's direction requires examining the company's acquisitions and regulatory positioning as interconnected components. He stated that Ripple is assembling a full institutional stack, like traditional financial institutions, adding regulated capabilities in sequence rather than in isolation. Pompeius pointed to specific acquisitions to support his claim. He noted that Medico provided institutional-grade custody infrastructure. He also referenced Hidden Road, describing it as adding prime brokerage-level execution, financing capabilities, and access to core market infrastructure. In addition, he cited Rail as contributing high-volume payment distribution capacity. While acknowledging that not all acquisition prices are public, Pompeius argued that the direction is clear. In his view, Ripple is consolidating custody, payments, prime brokerage, and treasury-related services within one organizational framework. He suggested that this mirrors how banks structure their operations to serve institutional clients efficiently and compliantly. Beyond acquisitions, Pompeius emphasized Ripple's movement through the U.S. regulatory process, particularly in the Office of the Comptroller of the Currency Trust Bank pathway. He referenced conditional approvals, cited among firms progressing through that pipeline, and described entry into the regulated perimeter as transformative. According to his analysis, once an entity operates within that perimeter, it shifts from seeking permission to becoming part of the approved financial system. Pompeius linked Ripple's institutional build-out to the Securities and Exchange Commission's review of the proposed T. Rowe Price active crypto ETF. The SEC has set February 26, 2026 as the final decision date to approve, reject, or delay the application. The significance of this proposal lies in its structure and sponsor. Unlike the Bitcoin-only ETFs approved in 2024, this would be an actively managed fund. T. Rowe Price, which manages approximately $1.8 trillion in assets, has explicitly listed XRP as a core eligible asset alongside Bitcoin, Ethereum, and Solana. Approval would mean that one of the largest and most established traditional asset managers formally includes XRP within a regulated investment product. Pompeius suggested that such an approval would represent more than a new fund launch. He describes it as a milestone that could facilitate allocations from pension funds, retirement accounts, and other institutional pools of capital. He further implied that when a firm of this scale introduces a crypto product, competing banks and brokerages are compelled to provide comparable offerings to their clients. In closing, Pompeius posed a direct question. Why would Ripple be assembling custody, prime brokerage, payments infrastructure, and a trust bank framework at the same time that ETF access windows are being formalized? He asked whether the alignment is coincidental or a carefully sequenced strategy positioning Ripple at the center of institutional crypto integration. Let's also talk about why this Coinbase deal will bring banking giants to XRP. Crypto analyst John Squire has declared that major banking institutions are positioning themselves around XRP following a newly announced partnership between PNC Bank and Coinbase. In his statement, he wrote, "Breaking. Banking giants move to XRP PNC Bank partners with Coinbase, bringing digital asset access to millions of users. Institutional money is entering the system. The future of payments and global liquidity is XRP." Squire directly connects the banking development to XRP, presenting the agreement as evidence that institutional capital is beginning to align with the digital asset. His assertion is clear. As large financial institutions expand their exposure to cryptocurrency infrastructure, XRP stands to benefit as a payments and liquidity solution. The tweet was accompanied by a televised report outlining the details of the partnership. According to a CNBC coverage, PNC Financial announced that it has entered into a strategic partnership with Coinbase. Reporter Leslie Picker stated that the arrangement is intended to expand access to digital assets for PNC's banking clients and institutional investors. In addition, it's agreed that PNC will provide banking services to Coinbase. The report noted that Coinbase shares declined approximately 3.7% following the announcement, while PNC shares rose slightly. The companies plan to develop an initial offering that will enable clients to buy, hold, and sell cryptocurrencies. A statement from the head of Coinbase Institutional explained that Coinbase will support PNC's entry into the digital asset market through its crypto-as-a-service platform. The platform is designed to equip PNC with tools to build a scalable and security-focused digital asset business. The segment also referenced a separate development involving JP Morgan Chase, which recently partnered with Coinbase to pilot JPMD, a deposit token managed using blockchain technology. Later in the broadcast, PNC CEO Bill Demchak was scheduled to discuss the new Coinbase partnership, recent earnings, and regulatory issues while attending the Federal Reserve's Capital Conference in Washington. While Squire presented the partnership as a move toward XRP, some observers offered a more cautious interpretation. One commenter, Dave Newman, stated that the PNC and Coinbase announcement centers on crypto access and custody services rather than specific adoption of XRP. He argued that increased institutional exposure to digital assets does not automatically mean XRP is becoming the global liquidity rail. According to his view, the development represents a significant step for digital assets in general, but linking it directly to XRP remains speculative. Squire's position reflects a perspective held by some market participants that expanding institutional integration with crypto infrastructure strengthens the case for assets positioned for cross-border payments and liquidity functions. However, the details outlined in the CNBC report do not explicitly reference XRP as part of the PNC Coinbase agreement. And lastly, let's talk about why the XRP structure shifts bearish. Technical analyst Casey Trades has issued a cautionary update on XRP, stating that the asset structure has gone bearish following a notable trendline break. Accompanied by detailed chart analysis, the analyst explained that price action is beginning to show increasing sell pressure, with previous support levels now at risk of turning into resistance. According to Casey Trades, XRP's loss of the B-wave low marks a significant structural change. This development signals weakening upward momentum and suggests that the recent consolidation phase may resolve to the downside. The chart shared in the update illustrates a completed corrective pattern, with the breakdown reinforcing the view that the market is preparing for lower price levels. The analyst emphasized that the broken trend line is now positioned to act as resistance, limiting the potential for sustained upward movement in the near term. As long as this structural shift remains intact, downside continuation is considered the higher probability scenario. Casey Trades identified $1.40 as immediate local resistance. The analysis states clearly that as long as XRP remains below this level, downward pressure is expected to persist. The inability to reclaim $1.40 would reinforce the bearish bias and increase the likelihood of a move toward deeper support zones. On the downside, the analyst highlighted $1.11 and 87 cents as the primary targets. These levels align with major Fibonacci retracement zones shown on the chart, including the 0.786 retracement near $1.87 and the 0.854 retracement around 86 cents and 44 cents. The visual analysis also indicates confluence with prior structural support, strengthening the significance of these price areas. The chart further outlines macro resistance near $1.65. Casey Trades noted that only a decisive move above this level would invalidate the bearish outlook. A confirmed flip of $1.65 into support would signal renewed strength and potentially re-establish bullish momentum. Until that occurs, the broader structure remains vulnerable. So, how do you think is February 26th crucial to XRP holders? Disclaimer, this video does not force you to buy any cryptocurrency or invest in anything. With this, thank you for watching. If you enjoyed it, please give this video a huge thumbs up, subscribe to the channel, let us know in the comments your views on the XRP, and make sure to turn on the post notifications to get notified every time we post a new video.